All right. I think I'm live. Give me 1 second. Let me just check my phone to make sure because I tried to make a live video the other day and it just was not working. Okay. All right, cool. So we're live. Bam. All right. I'm just trying to bring up the chat. GG's in the chat. All right. This is gonna kind of be a I'm trying not to curse, but it's just gonna be a lot of different things all in one video. So I'm gonna watch some videos, talk trading, talk about some trades I placed this week. Um, I already posted some of the trades I placed in videos or I streamed maybe a few days ago. But the trades from yesterday and today aren't up, so I'm gonna kind of do both all at once. We'll look at the trades I placed yesterday. No, yeah, we'll look at the trade I placed yesterday. All right, so let's So as you can see, it was up 460 total, but after commissions, it was 447. Um, yeah, I don't want to hear my own voice, so we're gonna kind of skip around. So this is a Tradeovate platform, and this is one of my Apex accounts. And as you can see, I'm a scalper. Like I find some momentum, and I just try and get a little bit and get out. Oh, so let me talk about a little bit about what I did yesterday. So yesterday I had this short, and the reason I have to kind of go through it with the video, just so you know, is because every day at 5 p.m. when the market closes, it's either 5 or 6. These orders disappear on the Tradeaway platform, so you can't see the orders I placed for that day. Um, you know what? But as you can see, we'll just say yesterday was a profitable day. I shorted here. I wanted to short during this candle here. I really did, but we were just wicking all over the place, and then finally the drop. And this was a hundred tick drop. And as you know, like when you get those huge drops, it could easily just reverse another hundred ticks in the opposite direction. So I was kind of nervous. So that's why I waited for this first 5 minute candle to close. And then as you can see, like right at the low is when I got in because I was like, let me just give it a chance. I think I was like 450 in like 8 seconds. It was a very quick scalp. And then this was another signal. So once this candle printed, I had a signal with the little dot, and then I got in again down here. Got a little worse of a feel, and then the price went against me. I think it was like down like $500 or $600. So then I added another contract short, and it brought my average price to like right here. And then so when price started, it went against me a little bit more. So I think I was down like eight, nine, maybe a grand the most. So that was down a grand, and then price came in my favor, and I took profit here. But I wish I would have held it. Like I wish I would have held it. But profitable day. And then we'll just go ahead and go to today. Today's trades on trader rate. So I took a trade right here. I think I made like what, $80. This a couple minutes ago. I was on the phone with my dad. That guy stopped talking and trading. But today would have been a bad day if I traded in the morning. I will say that. Or it could have been. As you can see, I would have had a trade here short. The price would have went against me heavily. To be honest with you, I would have kept this trade up until it broke here. I would have been willing to take shorts at these swing highs here. So I mean, I most likely would have been shitting bricks and just like my heart would have been pounding like crazy. And I probably would have shorted here and then again here and again here, and that's like 4 or 5 contracts deep in shorts, and then hopefully, uh, you know, I was able to hold it, and then I would have been profitable. But if I took this short here, as you can see, the market just rallied from there. And if I would have added contracts, that would have been horrible. So I kind of want to talk about that because when you're trading with a negative risk reward, you need high probability trades, and every once in a while, you'll miss out on the signal, or you just won't trade or whatever. And today I just didn't trade in the morning, so I saved myself a loss, and you got to thank God for that. So, um, I wanted to try and get the P&L to over 2 grand for this for the well, I don't think it's 2 grand for the week, but this was like a quick like $5 it was up fit $75. It was up $75 at one point, and by the time I hit exit market or and cancel orders, it was only up $5. But this is a trade that put me up over the 5 grand. I mean the 2 grand. But I also had this trade here, and as you can see, this trade here went against me on the S&Ps. So um, I went long here. As you can see, these are horrible trades, horrible trades, but they worked out. So I went in long one contract here, and as you can see, I lost 37 bucks, and then price was going against me, so I added another contract here, and as you can see, I added 3 contracts. So me adding those 3 contracts put me up to a positive 112, and that made up for the loss. And I think it put me up like $65 or something like that. But I still needed like an extra $5 to be over the 2 grand. Because I think it was like 1996 or something like that. So then I placed this trade here, and as you can see, it was like a super quick trade. I made like $5. It was going against me, and I think I was down like $100 or something like that. And then I was up like $75, and I tried to close, but by the time I hit the button, it was only $5. But that did put me up over the 2 grand. And then I kind of noticed that we were kind of in this trend here, and I kind of felt as though we would continue up, making some plays. As you can see, it wasn't like any super bullish candles or a signal or anything, but you call it trader intuition. So then I made another $80. So the total P&L for the day is 160, but after commissions of pretty much $20, it's 141.40. So let's see what the oh yeah, we could go on yesterday as well. So as you can see, made 447 yesterday, which I said earlier in the video. And then this week, let's see what the P&L is. So this week, 19. See, this is I'm not gonna trade again. See, you want it to be like 2 grand, but oh, I already need almost $200. So yeah, we're good. We're good. Try to make $200, and it's like less than 30 minutes till close. But anyways, profitable week, as you can see. Losing trades 681 bucks, 7 losing trades, um 16 winning trades of 2,500, for a total of 1834 after commissions and fees. So so I had trade this week. I traded about a 70% win rate, which is normal. Like normally, if I'm like really a stickler for having a high win rate, it'll be like 80 to 90%. But it's the beginning of the year, and I'm kind of just trying to scalp these contracts really quick. So oh hey, what's up, man? How you doing? Uh yeah, so I was just trying to scout these trades really quick. I didn't want to, potentially give too much P&L back. But I don't know what my risk toward ratio would be on any of these positions, but yeah, profitable week. Let's see what my biggest loss was. Biggest loss of $235. Biggest win, it's like $800, I think. $500. Yeah, biggest. Oh yeah, 800. So biggest one is $885. So if you really think about it, that is technically like a 3-to-1 risk to reward ratio. Almost. But anyway, so profitable week in this prop account. Again, I'm trading with Apex. I'm done for the week, and we'll see how things go next week. I'm trying to like show some P&L trading wise, and then build up my confidence to try and trade live. Um, I don't know, like I don't know if it'll be too entertaining because my heart is pounding like crazy. You probably hear it in the microphone. But anyway, so I want to try and give some value to any new traders or investors. So I have a couple of tabs here of different things that I use to analyze stocks. So what I would normally do, like, so let's say that I'm up 2 grand for the week and or almost 1,800 bucks for the week, and everything's taken care of. So like I have food, place to live, and everything like that. I would rather invest it into stocks. Bonds haven't really been anything to invest in until maybe like the last 2 or 3 years because pretty much the saying, I forgot what the saying is specifically. It's just saying something like all central banks are pretty much trying to go to zero, like have 0% interest rates. Like it would be a blessing for every Fed to have 0% interest rates because that means that their economy is doing well. But the unfortunate part with having 0% interest, man, I want to short this. The the uh the unfortunate part of having 0% interest rates are that it is that inflation creeps up. So, anyways, I don't even remember why I got into that, but yeah. So let's go into so this is Substack. I love Substack. I mean, there's a lot of macro writers or traders and stuff like that that'll just talk about things that are going on in the economy, trading. Um, actually, let's bring up Brent Donnelly. So Brent Donnelly. Oh wow, that's weird. I should have been subscribed to him. Anyways, we'll do that later. But he's a great trader. He came out with this book. I forgot I had on Brent Donnelly. He was a trader for like hedge funds and banks and stuff like that. But he wrote this book. I think this is the website Spectrum Markets. But he wrote this book. My mentor told me to get this book. Not that. Yeah, The Art of Currency Trader. Art of Currency Trading. Good book. You do not need to spend like $500 on some type of forex course or anything like that. You could buy this book for 30 bucks and it'll pretty much teach you almost everything. I won't say everything you need to know, but it'll teach you a lot about trading currencies. And Alpha Trader is really good on not mathematics, but like trader psychology and like having a positive mindset and stuff like that. So these books have great value. But anything on Substack, there's a lot of good things on like I want to go there. Let's just check out macro. Oh, dang. Sorry, normally I use this app on my phone. But yeah, he's a good guy. Good guy. But anyways, this FinTwit or FinX, whatever you would call it, good resource. This right here is simply wall.street. Oh, I'm not logged in. Oh man, am I gonna have to log in again? All right, I'm not gonna log in again. But this is pretty cool if you wanted to look at like dividends or like value, future, past, health, and you're looking for equities to get into. So like for instance, this is public storage. I was just looking for something that had like a steady high dividend. So you see you get a dividend of 4.3%. Um, and what I'll do is I'll take the information from here. So for example, I was just looking at a few different ones. So this is extra storage, Cube Smart. This is extra storage. Oh, extra space storage. Oh, these are the same. Okay. Um, so I'll take this information and I'll go to a chart and look at just some information on like what is the chart looking like. I don't want to end up buying something like a I think it's Heinz. It's like no, that's Hershey's. Heinz. I forgot how you spell Heinz ketchup. I think it was like H. Oh man, now you guys can. This guy's an idiot. Let's put in ketchup. I know I'm spelling this wrong, but I have so much on my mind right now. That, yeah, Heinz, H-E-I, Heinz. Yeah, Kraft Heinz. I don't want to buy something like this. Like, they have a perfect dividend, but I mean, ever since they went public, pretty much in 2015, 2016, guess I remember Warren Buffett got into this. I don't know if he sold his shares or not. I know Berkshire Hathaway did get into Heinz. I think Berkshire Hathaway was part of the acquisition to take this to do the IPO. I'm not 100% certain, but I think they were. But this isn't something I want to buy. This is not something I want. I mean, when it's crashing like this, but then when you have something like Cube, where it's anything that pays a dividend is going to mostly go sideways, and you just have those couple of years where you get huge growth. But another thing I want to show you is this website right here. I do not know. This is like DQYDJ. Um, so I'll do like let's just say you started with 10 grand in 2016, and then you want to see how this holding would have done over the last decade. And this is kind of also important when it comes to investing, is when you're investing, or I would just say investing, you don't want to trade these type of things. But when you're investing, you want to do something from like decade to decade instead of, or like maybe 5 years to 5 years. I don't know what a fortnight is. Like, I remember like 4 score and 7 years ago with Abraham Lincoln type thing. But anyways, I would just say decade to decade. So if you think about this, if you invested 10 grand into Cube in 2016 on the 9th of January, you'd be up 17 grand. So you'd be up pretty much, we'll just say 8 grand. So you've made an annual return of pretty much 6% a year. Now, that doesn't sound like the greatest, but when you think about 2 decades, that's when this really starts to take a hold, and you're like, oh man, like I wish I would have got into this 20 years ago. So if you look at this now, you calculate the return, it goes from being up 17 grand to be up 37 grand. And then you made an annual return of pretty much like 7%. So you see that where you've made what, 27 grand over the last 20 years, but not doing anything. Just buying and hold, haven't touched it, just let it grow over time. Like, that's the easiest way to view investing. And I would say investing is way easier to trading, because you're gonna be stressed. I will tell you that you're gonna be stressed because you're gonna buy things that you would have lost the 10 grand. And you're gonna, like, that's why I say you gotta diversify, or like, maybe have like 10 stocks that you buy and hold for decades that you think will be able to last a long term. But yeah, I would just say, like, just look for things that oh dang, it's not showing. It's not showing because I'm not logged in. You know what? Let me see if I can log in without it being like, yep, I'm an idiot. All right. Anyways, so um this is another tool I use, FinViz. They have this screener tool. And with the screener tool, you can look up pretty much any stock. You can go based off the exchange, the market cap. So let's say we wanted to look for something that was like a large market. We'll go mega. Now, these are going to be the names that most everybody knows that pay a positive dividend yield. So that means they're going to be willing to pay you something, even for just holding the stock. You don't need to just focus on appreciation. Of course, these are going to most likely be positive PE. And then let's say we want it to be above the 200 period moving average, or the simple moving average. I don't know if they have exponential. No, they don't have exponential. It's all simple. So the 200 period moving average, and we'll say the 50, above the 50, the 200, and the 20. Now, when it comes to, we're going to take off the 20. We'll take off the 50. We'll just say anything that's above the 200, just to keep investing philosophy simple. So we have Apple. Everybody knows Apple. We'll look at Apple, APL. So we'll look and see what the returns on Apple would have been for the last 2 decades. Damn, that's crazy. So in 2006, I think this was before the iPhone came out. I think this is when they just had like the whatchamacallit, what is that thing called? It was before the iPhone. It was like a little music thing, and all it played was music. Hang on. Apple Music Player. I forgot what it was called. I iPod. iPod. Oh man, you guys are man, like my fiance always makes this joke that when we first started talking, I told her I didn't know what a BlackBerry was. And I was just joking with her, but she said she thought I was so weird because I didn't know what a BlackBerry was. And then now, you know what an iPod, the name of the iPod. Oh man, but anyways, so those are some good resources you can use. Market Watch, you can bundle. Um, I can't log into my thing because it's gonna show my name, but you can bundle Market Watch, Barron's, and the Wall Street Journal all together, and you can get all three for a decent price. This is the only thing that kind of comes separate is the Economist. They have good articles on here. So anyways, that'll be the end of the resources. There's a ton of different. Oh, let me also show you this. This was another thing I brought up with Cube. So this is I don't know, ROIC.ai. I think this was like a hedge fund guy wanted to build something to do like fundamental analysis on different companies, and they share this information. So you can just look this up for free. Um, so you can use this website to look at a company's financials instead of having to go look at their 10K individually. So like so when you're trading like stocks and you want to do like fundamental analysis or anything, there's like I forgot. Let's just do like Apple 10K report. So, yeah, so it's sec.gov, sec.gov, and you can have all their information, like what products they use, their like business strategy, company background. They'll even go into like risk or competition. But when I say risk, I mean like what things can hinder their business. So like, for example, I don't know how they do their products and everything like that, but let's say that they needed to mine silver in Brazil. If they had to mine silver in Brazil and all of a sudden there's like some catastrophic event in Brazil, knock on wood, then that would affect the pricing of silver or whatever they needed to mine, and that would affect their P&L or their earnings report. So they kind of go into a lot of different things. But instead of reading this, you could just come here, and then I'll go to Apple. That way you can see that, AAPL. That is pretty much the same thing. So everything that you saw on that website, you can see here. Financials, transcripts, stock splits, pretty much everything. This was the classic view. This is what it used to look like, but now you kind of have this summary, which is almost the same thing. It's just a little bit different. But yeah, so yeah, hopefully you found some value in that. And then now we're gonna watch some trading stuff. Well, not trading stuff, but like finance stuff. So this is why one oil company has a head start in Venezuela. I think it was Chevron, because I was watching a documentary with my fiance the other day about Venezuela, and I think they're like the other two major companies in oil in Venezuela are government owned, and then there's Chevron. Now, I think Chevron was really, bold to do business in Venezuela because of the fact that Venezuela could take the land or assets and all that type of stuff from businesses if they deemed necessary. So, but anyway, let's get into the video.
The United States has carried out a series of strikes against Venezuela, announcing the capture of Nicolas Maduro and his wife.
Nicolas Maduro stood in federal court and pleaded not guilty to narco terrorism charges.
Donald Trump said his military buildup in the Caribbean and destruction of civilian boats there was about alleged drug trafficking. But following the U.S. attack on Venezuela, another reason has taken center stage.
The oil business in Venezuela has been a bust, a total bust, for a long period of time.
Everything that we
I'll say this, like, apparently Venezuela has enough oil to outdo Dubai. As far as I know, like in the reports I saw like years ago, I'm not certain if it's still the case, but in Venezuela could it be, oh, I will say this. One thing that Dubai has over Venezuela is they control OPEC. So, but Venezuela has way more oil, I believe, than Dubai.
seen during his second administration has been consistent with his view that the U.S. energy dominance is key to his agenda.
We're going to have our very large United States oil companies go in, spend billions of dollars, fix the badly broken infrastructure, and start making money for the country.
But one U.S. oil company is already there and has been for decades.
Chevron produces about 25% of Venezuela's oil today, is the largest investor in the oil industry and in the country.
We've been in Venezuela for the last 100 years. Our presence there, we believe, is important for the local economy, the regional economy, the people of Venezuela.
This is a story about the extent to which a US oil company is willing to go through the trials and tribulations of geopolitics in order to stay in a country that has the world's biggest oil reserves.
Chevron has virtually no competition. It has no oversight. And so it's really a very unique situation.
So how did Chevron manage to stay in Venezuela when everyone else left? And what role could it play in the country's future if Trump gets his way?
Venezuela, on paper, has more than 300 billion barrels of oil.
Or roughly 17% of the world's known oil reserves.
Most of those reserves are in this vast deposit known as the Orinoco Oil Belt.
But there's even more potential underground.
The U.S. Geological Survey estimates that Venezuela has more than 1 trillion barrels of oil in place in the Orinoco Belt. To put it in perspective, the world, until today, has consumed about 1.5 trillion.
The chances are they are going to outlast the world's demand for oil, so effectively they are limitless.
And here in Venezuela, a forest of oil derricks grows from the water of Lake Maracaibo.
The golden age of Venezuelan oil sector was in the 1940s to late 50s, early 60s. The bigger players were Exxon and Shell, but Chevron too made a lot of money basically exporting oil from Venezuela to the United States.
The situation couldn't last forever.
You had these social tensions start to come into play, like in many resource-owning countries around the world, where people start to question, are we as the resource owners benefiting enough from our oil reserves?
In 1960, Venezuela became a founding member of OPEC, a cartel of oil-producing countries that managed supply and thus prices. And by the mid-70s, these were skyrocketing. This brought enormous wealth into Venezuela. By the end of that decade, its entire industry had been nationalized into the company Petróleos de Venezuela, known as PDVSA.
People in Venezuela at that time lived quite prosperous lives. You had stories of secretaries flying to Miami for the weekend to go shopping. You later have beauty pageants and things like that Venezuela sort of became known for, sort of showy wealth.
PDVSA became one of the most successful state-run oil companies, but there was a limit to how far it could operate on its own.
The government wasn't reinvesting enough in these oil assets, causing them to be run down.
And remember the Orinoco Belt? Those reserves come with a caveat.
Almost all of that oil is just too heavy, too sludgy to get out of the ground. In fact, it doesn't move without some sort of diluent to allow it to flow. Unlike, say, the lighter oil that comes from Saudi Arabia, Venezuela at that point really needed that foreign private investment, a whole lot of expertise, a whole lot of capital to get it out of the ground, to process it, and to get it to market.
The government decided to open up its oil industry back to the oil majors.
and Venezuela was still attractive. Even today, heavy oil, mainly from Canada, makes up more than half of U.S. crude imports.
Refiners in the Gulf Coast of Texas and Louisiana like Venezuelan heavy oil because their refineries were optimized for that type of oil.
In 1998, Hugo Chavez, a former military officer who had been imprisoned for a failed coup d'etat, won the presidency. His victory ushered in a wave of new state controls.
He passed a number of laws in the early 2000s, which effectively meant that PDVSA, the state-owned oil company, had to own a majority share in all the joint ventures across the country.
Okay, so that's kind of what I was talking about earlier with the government of Venezuela somewhat wanting to keep that monopoly over the oil. Which, Saudi Arabia has as well, but it seems as though, which I didn't know, that their oil is a lot more sludgy. So it's going to take a lot more to refine and process that oil. So they do need investors or like outside, and then, they need to consistently bring in talent, like engineers or, people who could, mine those fields, and then, capital and stuff like that. But I think that they kind of had, I could be wrong, but I think Venezuela kind of had like a little bit more socialist type of society where they were giving a lot of the profits to the people or reinvesting it back into like the country. But I don't think it panned out the way they wanted. And then, when oil prices dropped heavy, like late 2000s, like early 2010s, it really started to affect their economy. I think it was like between 2008 and 2014 and 15.
Bigger American companies, which were Exxon and Conoco, decided to leave the country to not upset the new terms that Chavez had imposed. And basically, they went into international arbitration.
Chevron, however, took a different approach.
Chevron's Venezuelan business was led by Ali Mashiri, who ran their Latin American operations. He had a very strong personal relationship with Hugo Chavez. This was really the beginning of kind of a special relationship between Chevron and Venezuela that no other foreign oil company enjoyed.
To give you an idea, 20 years later today, Conoco is still owed, for example, more than $10 billion from the awards of arbitrations.
Wow.
When Hugo Chavez was elected, oil prices were only $25 a barrel. So while he was enacting this period of reforms, oil prices rose up to a record high of $146.
I think it was I think it was like 08. I was thinking it was 150, but 146 a barrel. And then within like a few months, it went all the way down to like 80 or 60. I think it kind of had like a low of like 40 or 50. Hang on, I'm gonna look at my chart.
A barrel.
But the oil revenue was mismanaged and went into other government spending.
Chavez was running deficits of almost 20% of GDP in the middle of the high price peak.
The amount of corruption that quickly developed, the amount of
Okay, I'm looking at it now. Yeah, it almost went to $30 a barrel. So we went from a high of 146, almost $30 a barrel between 2008 and 2009. And I think that that's what kind of started things to get rocky. And then oil started to recover early 2009. And then it kind of had like a high of like $110 a barrel in 2011. But I think since then, we've kind of like, in 2021, almost 2022, we went back up to those prices. But I mean, you're looking at like a solid like 15 years of it being undervalued, and all the other stuff that's going on with crazy high inflation in Venezuela, poverty going through the roof, all kind of stuff. So it's really a series of unfortunate events for Venezuela over the past pretty much 2 decades.
of mismanagement of the oil industry was quite dramatic.
This was the situation Nicolas Maduro inherited when he took office following Chavez's death in 2013.
So the economy was already in deep trouble, and it went into a tailspin. It basically reached hyperinflation.
And when you're in hyperinflation, to get out of hyperinflation it's like damn near impossible. Like you kind of have to guarantee that your country is, people are gonna suffer, but and him just getting in office as they go into hyperinflation is I mean he was dealt a bad hand from the start.
And it remains a persistent problem that, for outside observers, is near impossible to gauge. Bloomberg's Café con Leche Index, as the name would suggest, tracks just one item, a cup of coffee. Its price has increased 587% over the past 12 months.
Across the country, people's savings started to get wiped out. There was huge economic disarray. This caused a groundswell of protests domestically.
Tens of thousands took to the streets of Venezuela today, demanding that aid be allowed to flow into the country.
Which
and see, this is what I was saying. When you get into a country that has hyperinflation, you're in a no-win situation, especially when you just get into office once hyperinflation starts, because people are already struggling. So you don't really want to start like a manufactured recession, because they're just going to struggle more. But then as you see, you keep letting that inflation grow higher and higher to where you damn near have no choice but to pray, because I mean, there's almost no getting out of it. Your people are going to start to protest. There'll start to be riots because people can't afford the basic necessities. But then also you're having, a car that should probably be 10 grand now costing 100 to 200 grand for a car, like a basic car, like a Honda or Toyota or something. You're talking about like things where people can't even afford the basics. And like a loaf of bread will be like $1,000 or $2,000. Like hyperinflation is like one of the worst things that can happen to any country. And there are so many countries that are going through it currently, and it's just not talked about in the media, especially in like American and Canadian media. But media as a whole doesn't really cover these other countries' issues that are going on in the world. So like when you see like Trump abducting the president of Venezuela, you kind of view it as a bad thing. But I remember reading a report years ago in like 2023, I think, that there was a lady who was actually elected as the president of Venezuela by the people. But then I kind of think that's where they kind of started to call him a dictator, because he wouldn't give up the office for her to become president of Venezuela. And then that's where it was kind of like a coup d'etat type thing, I believe. I'm not 100% certain, but, we can look more in depth with it in another video. But there's a lot of crazy stuff going on in Venezuela over the last few years, or, decade for that matter. And, people haven't really heard about it unless you kind of have an interest in these type of things.
Nicolas Maduro clamped down on pretty hard.
This shows how Venezuela's contribution to the world's oil supply dwindled during this period. Meanwhile, Donald Trump was in his first term and took a decidedly hardline approach, backing opposition lawmaker Juan Guaido's bid to take control.
Joining us in the gallery is the true and legitimate president of Venezuela, Juan Guaido. Mr. President.
Oh, that's already. Maybe that was that was in 2020. I swear in like 2023 or maybe it was 2024, there was another person. I think it was a woman who was supposed to be president. I could be wrong. And I might misheard something, but listen.
Trump imposed financial sanctions in order to exert pressure for some kind of positive change within the country. Initially, they did not touch the oil industry, but later Trump heightened those sanctions. This is a major problem now for Chevron.
But the company managed to preserve its assets. And when Joe Biden became president, even more leniency was granted, and production bounced back.
The Biden administration said, we're going to try carrots and sticks to try to coax Maduro into reversing some of that democratic backsliding, to hold free and fair elections. One of those carrots was Chevron.
This helped stabilize the country's economy.
Chevron brings in dollars to the economy and helps to reduce inflation.
That Chevron's been allowed continuous operations underscores just how central its presence has become to Venezuela and the U.S.
Chevron has been making the argument for years that if it is forced to pull out of Venezuela, U.S. adversaries will simply move right in. And here it's talking about China, it's talking about Russia. And this argument has been very persuasive in some circles in Washington, which is part of the reason why Chevron has stayed for as long as it has.
And now all eyes are on how much it and other oil companies might be involved in what happens next. But fully exploiting Venezuela's oil resources won't be fast, and there's no clear financial incentive to do so.
Oil prices actually notched their worst annual decline since 2020 this past year. Part of the reason for that is the oversupply in the market right now. Some analysts estimate it could take a few months to return production to above maybe 1 million barrels a day. But over the long term, it's going to take upwards of $10 billion a year for a total of maybe 10 years to bring Venezuela back to its peak production levels seen in about the 70s.
Oil companies are no stranger to challenging environments, but the political instability, the environmental liabilities, the really precarious state of the infrastructure, the crime, it's a very, very tough place to be.
A big part of what we're all looking to now find out is whether the Trump administration will provide concessions that incentivize these companies to come back despite their past grievances.
We are going to run the country until such time as a proper transition can take place.
So while the international...
You know, it's kind of bothering me now. Let me look and see. Venezuela. I could have sworn it was like, let's see, 2024. I guess I was wrong. Maybe it was something else. But anyways, jump back into the video.
Fallout from Trump's attack continues, and the future of Venezuela is incredibly unclear. There is a takeaway. Chevron may be the player facing the best odds.
Like many places in the world, we have to take a long view on our presence in countries like this.
Chevron has is what Wall Street calls an option value. Now, this is a bit like putting one chip on the roulette wheel every single year. And you may not win this year, you may not win next year, you may not win the year after. But at some point, you will win. And when you win, you're going to win big.
So let's go to the next video.
Most people will spend their entire...
Alright, so how to actually become a polymath.
life mastering just one thing, but the most valuable people in history, they mastered many and combined them into something the world had never seen. Leonardo da Vinci wasn't just a painter. He was an engineer, anatomist, musician, and inventor. Benjamin Franklin wasn't just a founding father. He was a writer, scientist, and diplomat. They weren't born with extra brains. They built a system for learning and connecting ideas. And today, I'm giving you the world's shortest, fastest guide to becoming a modern polymath. Step 1. Start with your anchor.
I'll say this, I think it's easier to become a polymath today because the information is pretty much available to everybody. And if you have interest in a subject enough, you had like the information's available to you. Whereas back then, I think it was so hard to become a polymath because of the fact that, maybe you didn't have access. Maybe a lot of people didn't know how to read just for one of the basic reasons. But then also people didn't have access to information or books or libraries and stuff like that. And maybe they kind of just pick stuff up here and there that they found interest in. But, I think now that, you have the web, World Wide Web or whatever, there's possibility to, try different things, to find things or see other people do things that you might have an interest in.
Before you
And for us, it's like trading or business or real estate or, whatever you're doing to make money.
try to learn 12 skills at once and burn out, pick one field, call it your anchor, go deep. Not you watched 3 YouTube videos deep. I mean, understand the fundamentals, solve real problems. Talk about it without sounding like you just copy.
I'll tell you this, when I got into macro heavy, I was able to find my mentor, and it's the craziest thing. I found an interview he did on like maybe the 20th page of Google. And it was probably one of the most enlightening things I ever listened to. And then I just so happened to find his Twitter account or X account. It was still Twitter back then. And I reached out to him. And he taught me so much about macroeconomics. I mean, it was a blessing, for sure.
Copy pasted from Wikipedia. If your anchor is psychology, learn core theories, research methods, and debates. If it's coding, actually build something that works. Why? Because depth gives you confidence to branch out later. Example, Elon Musk started with physics and economics before branching into space rockets and self-driving cars. If he'd started with making flamethrowers, we probably wouldn't have SpaceX today. Step 2, add branches. Once you have depth, it's time for strategic breadth. Pick 1 to 2 related fields and explore them. If your anchor is psychology, branch into neuroscience and philosophy. Look for overlaps. And ask, how does game theory explain relationships? Or, how does design influence decision-making? This is called the T-shaped model. Deep in one area, wide in others. Example, Steve Jobs mixed technology with calligraphy, and the rest is history. Step 3, learn like a polymath. Here's the 80-20 rule. 80% of your learning time goes to your anchor. 20% goes to exploring new areas. Learn actively. Teach it to a friend or your cat. Cats are great listeners, terrible note takers. Apply it immediately. Make a mini project, write an article, code a tool. Memory? Don't just read and hope it sticks. Quiz yourself, explain it out loud, or turn it into a story you could tell at a party. Da Vinci did this with notebooks full of an...
To kind of go into this, I think this is really important because I tried to learn Mandarin, Spanish, Italian. I feel like there's another language I tried. Japanese. And the furthest, I guess, school-wise, the furthest I got was Spanish. But the one on my own time that I got the furthest in was Mandarin. And because I didn't speak Mandarin I didn't speak Mandarin with anybody. I lost it. Like everything. I remember Ni Hao Ma. That's it. Like Ni Hao Ma is the one thing I can remember. And I learned Ni Hao Ma from a guy, maybe in like 2014. He said Ni Hao Ma to me, and then he told me what it meant. And that's how I remember it. But when I did like the Duolingo, the Rosetta Stone for Mandarin, like I don't remember anything. I don't remember the I don't think it's called hieroglyphics, but I forgot what the calligraphy for Mandarin is called, but like how to spell words or read signs and like the basics of Mandarin. I forgot all of it because I didn't use it. And that's why I think what he said in this video makes a lot of sense. Like if you're a trader or investor and you don't talk to anybody else who's trading and investing, I won't say that you're gonna forget it completely or not be able to understand it just with all the content that's out here with trading and investing, but it is a lot easier to learn when you have like a friend or somebody who you can bounce ideas off of. And even if you guys are on like different levels of investing or trading, like just to be able to talk, like I see a lot of people talking about like ICT and stuff like that now. Like if you're talking to other ICT traders about fair value gaps and breakup structure, and they call it like change of character or something like that. You know, you're gonna get it a lot quicker than if you're just doing this stuff by yourself. So yeah.
Anatomy sketches, engineering designs, and grocery lists. Okay, maybe not the grocery lists, but you get the point. Step 4, build your polymath routine. Daily, 1 to 2 hours deep learning in your anchor. Weekly, 3 to 5 hours exploring related topics. Monthly, do one project combining multiple fields. Example, apply psychology to game design, so every level feels like it's reading your mind. Or bring philosophy into coding by designing apps that actually question human behavior. And remember, don't do this alone. Communities multiply your growth. That's why I built a Discord where people share skills, swap ideas, and push each other forward. Links in the description. Step 5, avoid the traps. Don't dabble without depth. Learning a bit of everything with no mastery is like building 10 half bridges.
I do agree with that. I think the reason a lot of people pull out the numbers that 95% of traders or something like that fail is because it'll be somebody who opened a trading account, put on a max lot position or max contract position or whatever, or bought the max amount of shares they could of one stock, and then they blow up. And they never did any research. They probably took a majority of the basics, but just trying to figure out how to open up a brokerage account. And once you open the brokerage account, you're just going all in on one position, and then you're done, which now makes you part of the 95%. But I think people who really put in the time and effort into learning how to trade, I think anybody can make it work because it's not super complex. I think the complexity comes from, their own mental games or their own psychology of what, pretty much like how your brain operates and deals with pressure and stress. Because that's really all trading is just pressure and stress. I mean, you can only buy and sell. And in the case of options, you can buy a call or buy a put and sell a call and sell a put. But it's pretty basic. I mean, the market can only go up and down and sideways. And you can flip a coin. And I think the people who kind of make it the easiest and make the most money are probably the people who are just long only. And they get in something that has a high beta. That's something we're going to have to talk about in another video. A high beta. High beta equities. But yeah, let's jump back into the video.
None of them get you across the river. Don't skip fundamentals. If you can't explain the basics without panicking, you're not ready to move on. Don't isolate yourself. Talk to people in different fields. You'll see connections you'd never find alone. And please, don't try to be Da Vinci. The world doesn't need another Leonardo. It needs the first you.
Arizona beverage.
So, kind of going into, I was looking to get into business maybe 5 or 8 years ago, and I talked to so many people in so many different industries, and I was looking to do something that I could purchase or growth through acquisition type thing. And I talked to people who owned restaurants, HVAC, trucking, nightclubs, promotion, advertising agencies, social media agencies, people who own blogs, things that be like a digital nomad type of businesses, like something online, or maybe you have ghostwriters or people who do copy and stuff like that. But I mean, anyways, I talked to so many people from so many different businesses, and I will say that the thing that I find interesting is when you talk to so many people who are in all types of different businesses, is that they pretty much all have the same struggles, which is employees, dealing with all those different type of personalities, and then advertising, and then just the day-to-day little things that can annoy you. And you'll learn a lot if you just talk to a lot of different business owners. But let's go into the next video. And we'll probably call it a day after this one.
America's favorite down-home restaurant is suddenly on the front page,
Oh,
and
you
it
know what? Market closed 21 minutes ago. Let's see what happened. Yeah, see? Oh, remember I was telling you I wanted to go short? It would have worked out. Of course. I don't remember what time it was, but it was probably somewhere around here where I was like, I wanted to go short, and it would have worked out. You know, depending, you know, it would have worked out. It would have worked out. I don't know how much I would have made, but it would have worked out. Anyways, we're gonna go back. We'll watch this one. We'll watch the Cracker Barrel.
WeChat has 1.3 billion.
So logically answered. So this is so I think this is a video about X, owned by Elon Musk, is trying to do something similar to WeChat, to where you have like an everything app, like finance, social media, Uber, like everything all in one app. To be honest with you, I think if Elon had better like publicity like he did in like 2017, 2018, I think he could have probably pulled it off. But you know, you're gonna have people that use it, but then you're also gonna have people who are like, I'll never use it. And it would have to, in my opinion, for the people who would never use it, it would have to be something to where like they're like, I'm not gonna pay you unless you get this app. Like if your job, or let's say somebody owes you money and they're like, well, I only use WeChat, like I don't use Chase or CIBC or Cash App or any of those type of peer-to-peer finance apps. Like I only use X. And if you want to get your money, you're gonna download X to get your money. But I'll say that, like, I think that's the only reason I don't think that his view on X would be able to really grow the way he would want it to grow, because of the bad publicity he's had over like the last 4 or 5 years. Let's jump into the video and see what they say.
WeChat has 1.3 billion monthly users. Inside it, you can do almost everything. Text your friends, post stories, buy train tickets, send money, book appointments, all in one app. This is the super app, and for tech companies, this is the dream. All the users and all the money.
I believe WeChat's owned by Tencent, and which is a company I've loved Tencent since I heard about them. I think I heard about them first in 2017, 2018 when I first heard about WeChat, and I downloaded it when I was just watching a documentary on China.
So why don't we have one in the US? Why can't the West seem to build its own super app? Okay, but let's take a step back. A super app, as you might have guessed,
I wonder if somebody were to build a WeChat in the US, if it would be considered a monopoly. Now, I mean, and the only reason I say that is because there's so many things built into one, and I don't know if the government, or I think it's SEC, I don't know if the SEC would consider it a monopoly or not.
Is one place that handles virtually everything, but not just the obvious ones either. You can post and browse friends' socials, watch videos, follow businesses, follow influencers, shop and order food, book transit, book event tickets, hail rides, rent bikes, pay bills, book appointments, send and receive money, split bills, pay in physical stores with QR codes, add contacts, collaborate on files, use financial services or insurance, and that's just the start of it. WeChat is the everything app in the literal sense. Pretty much everything you could ever need is on this app. It's a super app. And it's not just China that has one. Japan's own super app, Line, is used by over 70% of the population.
I've never heard of Line before. And I didn't even know they had a super app in Japan.
And Korea's Kakao Talk has over 90% of the country's market share. But the West, aka America, Europe, and Oceania, don't seem to have one. And it's not for lack of trying either. Facebook seems to be the...
I want to say this real quick. This is just a brief little notice I know. I've rarely heard somebody call Australia Oceania, even though like that is like the region. But you don't hear that too often. I think that's interesting.
Candidate for this. It has their social feed, news, groups, events, marketplace, VR, and even direct payments. But Meta's actual plan is a bit stranger. It's WhatsApp, but not in the US. The app is pivoting to a super app overseas. In Brazil, you can pay businesses directly in chat. In
That's cool. I
Mumbai,
didn't
you
even know
can
you
buy
could do
metro
that.
tickets through WhatsApp messaging. In fact, as of 2025, 19% of all ticket bookings are made through WhatsApp. And it's pretty clear what
That's crazy.
Zuckerberg's
I didn't know that.
inspiration is here. He said the ultimate goal here is to make it so you can find, message, and buy from a business all in the same WhatsApp chat. His biggest competitor has the same ambitions. Since Musk acquired
I would say that Mark Zuckerberg has a better potential opportunity to make WeChat than Elon Musk. Even, and this is the crazy thing to me about perception from a societal standpoint, because of the fact that Elon Musk could potentially build an app better than Mark Zuckerberg, and I know that that's Mark Zuckerberg's like area, so I think that he would find a way to make it better. But just hear me out for a second. Like Elon Musk could potentially build a better social media app to compete with Zuckerberg. But just the fact that he just has so much bad publicity amongst people that people would still rather use Mark Zuckerberg or Facebook or Meta's version of WeChat. But I will say that them both having one would stop it from being a monopoly. So I think that that would be a needed case for there to be both. But I will say that I think Meta's will probably be more interactive and probably more innovative. But I also think that Elon would kind of have more of like white. It sounded like I said white, but right wing users who would want to have the freedom to say whatever they want to say. And me being who I am, I would definitely have both because I would probably more so be on Mark Zuckerberg's, but then I also like this. I like to see when people say crazy stuff and post like the most obscene things that you would probably only be able to see on like the dark web or something. I love that shit. I think Mark Zuckerberg would probably have the bigger platform amongst the two, but it would definitely stop it from being a monopoly.
Twitter, he's been pretty vocal about his aspirations for X. Back in October 2022, he said, "Buying Twitter is an accelerant to creating X, the everything app." And his moves have become more and more drastic. He overhauled the platform and started adding financial functions like Visa payments through X Money. They've also acquired money transmitter licenses in 41 US states, but that's just the beginning. There are plans to add investing and trading and even a physical debit card tied directly to X Money. And like Zuckerberg, Musk has pushed for a deeply integrated AI into the platform. But these two billionaires are just the tip of the iceberg. Many companies are also trying their hand at consolidating everything you need into one place. Uber has ride-sharing, food delivery, and more recently, scooter rentals, and they also have Uber Cash and courier booking. They were even looking to acquire Expedia to move into travel bookings too. It's the same thing with PayPal. They redesigned the app, incorporated online shopping, bill paying, crypto trading, and budgeting. They even called this app the PayPal Super App. It seems like everyone is trying to make one. Even more companies than those here are racing to create an app you buy, trade, message, and post on. They all want you to do everything on their app. After all, that gives them more control, more money, and more power. But it seems that's just not happening, at least not in the US. Facebook is actually dropping messenger payments. X's super app features are typically fringe and unused. Uber's acquisition of Expedia fell through. The other big candidates here are Apple and Google, but they don't seem to be chasing the stream, at least not anymore. Apple and Google Pay let you register cards, tickets, even IDs, but keep everything else in separate apps. It seems like they realized people like doing a lot in one app, but there is a line you can't cross. People don't want to do literally everything in one app. But why? Why do these apps keep fizzling out, backpedaling, or just going nowhere? With this many attempts and resources,
All right, before he gives us the answer, I think in a majority of the countries that he's talking about, with like America and stuff like that, or like Canada or like Europe, I think there's a lot of like conspiracy or like ill will when it comes to tech companies and privacy. So let's say you have an everything app like X or WhatsApp, or like like the WeChats or the Line and all that stuff in these other countries. Um, the potential for this one app to be breached with some type of data or like security issue or being hacked, the fact that you have all of your cards, all of your orders, like your Uber Eats orders and the time you use Uber, or when you buy a plane ticket, when you want to buy a phone, the voice recording, all the data that comes from having everything on one sole app. I think that's kind of where it really wouldn't do too well in the West and in Europe, because of the fact that, people are a little bit more cautious when it comes to that type of stuff. Versus where in, like China, Korea, and Japan, or like Mumbai and Brazil, where they said that people were using WhatsApp like in everything app. I think it's a little bit more like people will probably worry about those things, but it's not as huge of a conspiracy, I will say. And like there's still a percentage of the population that don't even use these apps or wouldn't download the everything apps. But I think a majority of people, when it becomes a societal norm, it just becomes something easier to do. But I think that that's pretty much the reason why in the West it just doesn't pan out the way that they would hope for, because nobody's trying to have everything in one data breach just get exposed.
Surely we'd have a Western super app by now, right? In 2024, the German Institute of Transport Research published a critical article about super apps, in which we see this. It seems all these companies reach stages 3 or 4, where they grow so big they move into all kinds of other industries. Social media companies move into commerce, finance, investing, and all sorts, but they struggle to get to stage 5, the super app. What's the barrier between 4 and 5 that's stopping a Western super app from taking over? Let's start with the more obvious one. People in China and the United States are very different. But in what ways? Well, let's look at an explanation from a university in China. China embodies more collectivist cultural traits, emphasizing that individuals should work for the good of the group. There is a strong emphasis on community values such as solidarity, group and family cohesion, as well as individual responsibilities to society. Chinese culture prioritizes mutual social support, harmony, and conflict avoidance, with a focus on close internal relationships. The focus is more on the group, aka collectivism. With WeChat, this is online collectivism, which results in close-knit, trusted networks. Social media is supporting China's traditional values by virtually linking a vast collectivist society. WeChat, with all kinds of functions, feels communal rather than intrusive. Whereas in the West, the focus is on individualism, a person's own merit and value. People like to express themselves.
See, that's pretty much what I was saying. Like, in Eastern countries, they do have a lot more like, what was the thing in Star Trek? The needs of the many outweigh the needs of the few. Versus in, Western countries, there's kind of like individualism. And like, I'm different than the person next to me. And I'm more important, or I'm more intelligent than this person, or my views and values are more important than the collective. Which, to each their own. I mean, that's just how, the society, kind of formed over decades. But I find this stuff really interesting.
Individually. We might think of that being our fashion, music taste, car, or job, but it's in almost everything, including the apps we use. DoorDash or Uber, X or Blue Sky, American Express or Bank of America, iPhone or Android, Spotify or Apple Music. People in the West love to express themselves, even down to the apps we use every day. Cramming everyone onto one app removes a lot of that individuality, but this actually runs very deep, much further than personal expression. Think about it. In countries which are either republics or democracies with individual voting and changing governments, there's a resistance against consolidated power. Even
I will say that that's what something that's always been interesting to me with the difference between China and the US, where in China you have no real opinion on who, I don't know if they call him the president, but the president of China, like I mean, he's locked in. Like he's locked in. But in the US, for example, where I'm from, like you have people who have their own individual thoughts on like Biden, Kamala, because they were both running in the last election, and then President Trump. And you'll have people who kind of almost make their whole identity like who they voted for or their views or the people that they support from a political standpoint. And it's like if so for example, if you're a Trump supporter, you're instantly racist, versus if you're a Kamala supporter, you're instantly like supporting, I don't even know what she was talking about, but like instantly supporting like trans rights or something like that. I don't know. But like people kind of make it their whole identity, or even if you're opposed to the opposition party, then you're instantly an enemy, or you don't even love them or care about them. And it's like weird to me how like we're kind of coming into this binary social structure to where like you're either racist or you're not, or you're like transphobic or you're not, or you're for immigrants or against immigrants, and if you're against immigrants you want them all to die, or if you're for immigrants you want to give them the entire country. And it's so weird how the West, we kind of all have these individual like ideologies that can make us go into these arguments with somebody else who has just a different opinion than us. And I just think that it's so weird to me how, you could have a best friend or a family member, like your favorite family member has a different view than you. And then the thing that's so interesting to me about the psychology of the human brain, I know this is kind of going on a whole other topic, it's finance, but it's like somebody can have a different viewpoint that you love, but then just because they might be of a different religion now, or they might have converted to a different religion, or they support a different politician, and you're like, man, I hate this motherfucker. Sorry for the cursing, but I think I kind of just needed to say that word to kind of just show the type of hate that people could kind of come from just because you have a different view or opinion. And me personally, like, I have people who support both parties who I love, and like they'll talk bad about the other, and it's like, I'm not about to support you talking bad about somebody else just because they have a different view. I might think that might not agree with their view, but I mean that's perfectly fine. But I just think that we're kind of coming to a point within the human history, or human let's just say like pro history of people starting to continue to divide themselves based off their views. And it's unfortunate to me that we're kind of at that point. I mean, it's just going to get worse as we kind of go along, but I'm praying for like the next election to be a little bit more civil and less chaotic, and hopefully people can stop focusing on like the hate that they have for somebody else or their views, and like we could just all come together and just say we want what's best for the country and the people within the country to live and be prosperous. Anyways, let's jump back into the video because I smell food cooking and I'm hungry.
with the tech giants we have today, there is a limit. Many of us don't like it when one group gets too much power. So if one company wants you to do everything, many of us naturally start getting suspicious. In Western countries, there is a more pronounced skepticism towards large corporations and data sharing, which could hinder the acceptance of super apps. And there's good reason for that. Many tech giants have proven they can't be trusted, and regulations need to be tightened.
That's pretty much goes to what I was talking about earlier with people not trusting, just one company to hold all that data. Like to have one app. Let's say you log onto Facebook and you just so happen to click a link and your Facebook gets hacked. Not only does your Facebook get hacked, but then also they would also have access to your bank account, your credit card information, your social security number, your address, where you live. Well, address and where you live are the same, but like where you work is what I meant to say. Where you work, like they have access to everything. Your travel patterns, your favorite restaurants, your friends and family. And I mean, like at least with right now, like all if they get onto your Facebook, they just have access to like like maybe where you work and the city where you live, but they don't have your actual address or they don't have your phone number. They're just able to hack into your social media, and they might get access to your phone number because of the social media thing. But let's just say your whole identity can't be stolen if they just hack your Facebook. It can if they're good, but the likelihood of them being that good as well. They just take your profile, maybe use it to scam somebody else or to sell something or whatever. But to have everything on one app and the potential for that one company to get hacked, do like a backdoor or whatever, maybe an employee just got lazy one day and just gave somebody access. But anyways, I just think that that's the reason why we won't really see that stuff in the West too much. And then also, when you think about China, like you're not thinking about people like hacking, Chinese companies as often as they would like a US company.
One study found that 92% of Germans are concerned about data security and want tighter regulations. Most people in the US think their personal data is less secure now, that data collection poses more risks than benefits, and believe it is not possible to go through daily life without being tracked. With tighter laws like the Digital Markets Act and the Digital Services Act in the EU, it's no wonder why we haven't seen a super app. Asian markets generally have looser regulations regarding data privacy and antitrust enforcement compared to Western countries. This is why WeChat hasn't exploded in the West. The New York Times shared that those all-in-one functions that the platform provides will make it an ideal one-stop surveillance site for Big Brother. But this skepticism isn't universal. 56% of Chinese citizens, the highest of any Asia-Pacific country, said they're willing to give their personal data to banks, telecom providers, and retailers. One Chinese respondent said she wouldn't be so concerned if her name, gender, or phone number were leaked on WeChat. Only if her private chat logs were hacked would she start to worry. But even still, she said she would likely continue to use WeChat because it's so indispensable to daily life in China. So, will we ever see a Western super app? Is it even possible? As it turns out, yes, but maybe not in the way you would think. Elon Musk decides Twitter is going to be for everything and you're going to like it. Yet, no one seems to be thrilled about that. Though there is one company closest to a Western super app. Not X, not Meta, not even Apple or Google, but actually Amazon. And their approach seems to be a bit different. Many people already do most of their shopping on Amazon. Almost 40% of US e-commerce is dominated by Amazon alone, and their lead is massive. Yet, that's somehow just the tip of the iceberg.
Introducing Amazon Pharmacy. Now you can get your meds delivered just like everything else. We make it easy to understand and compare prices and copays, and we work with most insurance plans, so you don't have to worry about it.
You can also receive regular pharmacy products automatically every month with Subscribe and Save. Same thing with shampoo, makeup, toothpaste, multivitamins, and many more. Amazon is secretly doing everything. You might know Amazon Pharmacy along with Prime Delivery, Prime Video, and Prime Music, but there's so much more. You have Amazon One Medical, aka Healthcare, Amazon Fresh Groceries, Amazon One for fast biometric checkout, Amazon Pay, Audible, Kindle, Twitch TV, Prime Gaming, Amazon Photos, Amazon Wardrobe, Amazon Kids Plus, and yet somehow even more. Much of this is under or linked to the Prime membership. The only thing missing is a social media platform. But for virtually everything else, the company with the super app is Amazon. Though it doesn't all seem to be in one seamless app. In fact, they seem to be getting more segmented with Amazon Pay being its own app, and that might be the key to success.
I agree with that. I could see Amazon, making that into it. Because if you have everything, somewhat separate, where it's not like everything in the same data center, and I'm pretty sure like the main company will, have information on like the data that's being collected. But if there is a data breach, it's not gonna affect the whole organization.
None of these sound the super app alarm, which brings regulators and the public swinging. They just seem to be more Amazon perks. Amazon also isn't boasting about a super app like Zuckerberg or Musk, but instead quietly building out every type of service you could ever need under one roof, just not one app. And this way, customers in the West don't feel strange or resistant. Every service feels more opt-in than it would be under a single app. And if you haven't already, you should opt in to subscribing to Logically Answered. We're working on getting to 1 million subscribers by the end of. We might just be able to pull it off. Amazon has secretly built a super app, or the closest thing to it. Will the West get its own WeChat someday? It's possible, but it's highly conditional. A 2023 survey found plenty are open to a super app if trust and the data security boxes get ticked. And I just can't see that happening for a for-profit company. The closest we'll probably get is what Amazon is already doing. But here's a better question. Do we even need a super app? Companies want to make a super app, but maybe we should ask why. Obviously, it would make more money, but it goes deeper than that. Having more of your habits and life under their influence gives them more power, which gives more opportunity for someone to overstep the line. So it's probably for the best that we don't have a super app and that the West is inherently against the idea. Amazon has been dominating so many industries, yet it seems like their main shopping experience sucks now and is essentially a fast yet expensive Temu. Check out this video next to see how Amazon let their e-commerce empire suffer.
Alright, so anyways, I appreciate you guys hanging out with me today. And yeah, until next time. Peace.